The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 10 a.m. Eastern Time, Friday morning, 30 minutes into the trading day, and we got a mixed market, as I just talked about on that update at the top of the hour. We get the S&Ps inching towards getting back to flat territory after touching almost 3,900. We got a print in the futures contract, 3,950. Yes, within half a point of 3,900. The S&Ps now jumped about 20 points from that price level, trading at 39.21. Tech stocks trading lower, the weakest of the indices, as has been the case. You get the NASDAQ 100 off 161 points, 1.2% in the red. The Dow continuing to show strength, positive by 0.5% or 167 points, 32,535 all-time highs. We got a print yesterday in the futures at 32,641 in the Russell, positive by 8 points as well, within just a few points of the all-time high print in the futures, actually making an intraday high 2340. The highs just after the close last night, 6:30 p.m. Eastern Time, 2344 for the Russell 2000. Jumping to commodities, crude off about 20 cents at 65.83. Gold taking a hit down about $20 at 1702.80. And notes and bonds continue to be the story. We're trading at 131.27, down from 133 just early yesterday. We got yields right now checking back into where we are. The yield on the 10-year, how about 1.62, 1.62%. Quite a yield. And that yield hitting the growth stocks, the tech stocks dramatically. As you see the NASDAQ 100, you put this on a daily, quite a divergence as you have the Dow hitting all-time highs. You have the Russell 2000 hitting all-time highs. You had the S&Ps within 1 point of all-time highs yesterday. You have the NASDAQ 100 1,000 points away from the all-time high in that index. All right, we'll jump around to the VIX, volatility index. As I mentioned also on the update, the VIX, very important to remember, the VIX predicated on the S&P. So we got the S&P only down about 7 points. The reason why you probably have the VIX barely elevated, about 20 cents from yesterday's close. The VIX trading at 2216 as the S&Ps. I mean, you're talking about an S&P right now within about 40 points from the all-time highs in that index across the board. Pretty interesting, too, when you think about Thinkorswim platform. I love the Market Watch, the heat maps they have in here. You pull up the indices, you pull up the S&P 500. Tech stocks dominate this bad boy as well. You only got the S&Ps down 6 points. Meanwhile, you got Microsoft down 0.8%. Apple's down 1.5% right now. You got Google down 2%. Google's got some problems going on and potentially in the EU. You have Facebook down 2.4%. All the biggest ones in here are down pretty substantially, down 1.4%. Tesla down 2.5%. You even jump to a company like Visa down 0.5%, right? Then you get into some of the other stocks, though. Rising yields, you got JP Morgan up 1.7%. The banks, of course. Bank of America, 1.8%. Wells Fargo, 2.5%. Citi, up 2% right there. AT&T, we're going to talk about this one in a moment. HBO, Time Warner, AT&T upgrading. They expect 120 to 150 million HBO Max subscribers by the end of 2025. That's going pretty far out there, but keep this one on your radar, folks. I've been talking about Disney forever. AT&T, Time Warner, they have a lot more going on than just HBO when you think about AT&T and everything that company encompasses. But if you just look at HBO Max, that streaming platform, let's jump over to it right now because that story definitely caught my attention early this morning, and you're seeing this continue to accelerate higher. Here's the chart of AT&T. We'll pull up the news story. Let's jump right over. AT&T raises the HBO Max subscriber forecast, sees 120 to 150 million by the end of 2025. This is a premium product, all right? I just signed up as a consumer myself for HBO Max about a month ago. They had a 6-month deal. I think it was about $70 for 6 months. I think the normal pricing is somewhere to the tune of almost $20 a month. substantially higher than whether it was Netflix, substantially higher than a company like Disney that's pushing them out at $7 or $8 a month. You even get the bundle in Disney. You combine Hulu, you combine ESPN, you're still paying less. 120 to 150 million. Now, HBO made headlines earlier this year that they're going to push out every single major blockbuster film that they do in 2021 is going to be released in theaters at the same time as it will be released on their streaming platform. Part of the reason as a consumer that I decided to sign up, got a family in the house, right? Got a new son in the house. Either way, you're at home. We're still waiting for a period of months, whether it's 3 months or so before the economy really opens back up. You're going to get all of that included for HBO Max. Pay attention when you're a consumer, folks, to your own tendencies, because many times you're not the only one that's seeing that type of a benefit or value. There is substantial value right now in HBO Max as a subscriber, and I'm speaking as a consumer. We're combining really a fundamental take on things right now, but there is substantial value. When you can sign up for HBO Max for a period of $70 for about 6 months, you get all their blockbuster films that are going to come out in movie theaters. You get their entire catalog, whether it's Game of Thrones, we've been rewatching a little bit. Everybody in the household hadn't seen Game of Thrones. Whether it's just their whole lineup of shows, right, that you have access to. That's a big number, folks, when you're talking about such a premium price for HBO Max. And you're seeing the reaction today. AT&T up by about 3%. And you look at this equity, this thing's got some room to run if they really start to take an acceleration here. Talk about falling out of bed during COVID. You go from a price level of almost $38 and change. You drop to $26. We've been chopping around that price level since then. You see the acceleration. Last week we got from 28 to almost 30. We're back above the 30 price level net right now. You may see some resistance bumping up to about the $32 price point. The highs in June, $33.24. Going to face a little headwind as we get over that level, as you get into that whole acceleration we had from about $38 down to $26. You back this thing up even further for a 5-year weekly. You can see they had quite a dramatic trend to the downside. You rebounded into the beginning of COVID, but keep that one on your radar, folks. I've always been talking about the streaming. We got quite a trade going on in my newsletter, Rocket Equities and Options, with Disney. You put this thing on a 15-minute, Disney chopping around. We just made all-time highs in Disney Monday earlier this week at about 202. You back it up on where we were on Disney on a daily. Yeah, quite the channel we got, breaking out from really November 1st. You get efficacy on the vaccines. But, folks, keep that one in mind. Disney's on my radar in a big way. AT&T. Of course, Disney is this. AT&T now on my radar in a big way, because those are quite a rise for the expectations back in October of 2019. Now, here's analysis that I made with Disney, okay? You got to look at the chart. Look what's factored into the chart. We're going to go a 3-year weekly to back things up. We're going to go to October of 2019. Now, again, you have a lot more going on in a company like AT&T, Time Warner, than just their HBO Max streaming platform. But when AT&T put out in October of 2019, they set a goal of hitting 50 million U.S. subscribers by 2025. Their price level at that time was 38. Today it's trading at 30, and they now tell the market that they're going to have potentially 150 million subscribers by 2025, exceeding expectations dramatically, as they should, over the last year when we've been shut down, stuck at home. Keep that one on your radar. AT&T up 28%. Stay tuned. We'll be right back after the break, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. I got a chart of Macy's up here. We're talking about Macy's and the YouTube Tiger's Den. We got a call yesterday, I believe it was, about Macy's. We had the channel line in here. It didn't take long to bump up right near the top end of that channel line towards about $18. We got quite a run up to about $22.30 earlier in the year, January 27th. If you're in Macy's, you know, be careful. It's not going to be a one-way rocket ship to the upside. We have some short interest in here. There's always the possibility. They're talking about maybe the Reddit boys and girls over there running this thing up. We got a new stimulus package, right? We got retail traders getting another $1,400 potentially to put into equities. You put Macy's on a 3-year weekly. We're now bumping up to basically right where we were in the beginning of 2020. That high, we're looking at a high of 1857. The next area you could shop around, maybe in the area between about 20 and 25. Macy's looks to be quite a little turnaround here. Macy's online sales represented more than 40% of total sales in 2020. Well, guess what, folks? They better have, okay? Because the malls were basically a non-existent entity for much of the year. And yeah, they might have had some traffic, but nothing like what normalcy looks like in a mall function. Management focused on retaining digital and young consumers, turning them into loyal shoppers. They got a $900 million cost reduction plan that's permanent. Asset sale gains will be a driver of income in 2021. Just some headlines out there. You had a Bank of America consumer conference going on, I believe it was a couple days ago. Just some headlines to keep in mind. No real huge news moving this equity today. We did talk about it. And that's quite a defined channel line. When you look at the up channel, the beginning of that, whether we had in November, you had the first run from about $6 to a high. We also made a high in December. We made a high back in January. And again, if you're doing a linear regression line, folks, this one might not make the most sense. You were up here for 2 days. I believe that had some Reddit going in that as well to 2230. When we've now peaked above that line, anytime we have since the run began in November, you've seen a little bit of a pullback. If we're just going to extend the bottom line of that channel to the right-hand side, you're talking about $15.50, $16. Doesn't mean you can't take a little bit off the table right now. You got Macy's up 7.3% today. They got still a long road ahead of themselves, folks. You're now trading at levels higher than where we were prior to the COVID shutdown. Very difficult to entertain the idea of Macy's being in a stronger position right now with everything they've dealt with over the last year. They're making that transition, but it's going to be a tough one. They still have a very, very large retail print. They're trying to bring that down with, whether it's asset sales, selling off some of what's not working, whether it's a cost reduction plan, trying to limit those costs that I'm talking about, whether it's employees or rents that they're paying for some of those retail locations. Macy's, strong numbers, up 7.5% today. You look at it on the daily again, though, keep your eye on that channel. We're now above that channel area. And, you're going to face some headwind here because we had some crazy action, some crazy volume. People probably got caught up in this area. I mean, look at the volume. We had 80 million shares on that high. And you're talking about a bar that only goes from 1675 up to 2230. All of those shares traded within that range. We just got above 1675 basically today. The low of today's bar is 17. So you're coming into that bar had 80 million shares. I mean, just for reference, yesterday we had 14 million shares. Today so far we got 7 million shares traded within the first hour of trading, up 7.3% today for Macy's. All right, what else we got going on in the market? Checking out some of the stocks. So Ulta out with their earnings after the bell last night. A little bit of a surprise as their CEO, Mary Dillon, she's going to be stepping down in June to be replaced by the company president, David Kimball. Dillon will move to the role of executive chairman. So Dillon's still going to be involved, executive chairman. Obviously, she'll be a player in that company, but not in the details of the day-to-day operations like a CEO would be. Separately, the cosmetics retailer beat estimates on the top and bottom lines for the latest quarter. They did cut its fiscal 2021 comp sales outlook. Ulta really crashed last night on this news. I mean, they cut their forecast for same-store sales. The CEO surprisingly stepping down. She's been quite a driving force in this company. I think it's about 8 years she's been the CEO of this company, and we're going to pull up a chart of where this stock has come and gone for over the last 8 years or so. Ulta down 10+% right now at $312. This company will be okay in the long run, folks. They are a juggernaut in a big way. I mean, you look at where we are. We're basically almost right back to where we were just February 22nd, right? Nothing really to worry about if you're a long-term investor. But new leadership as a CEO, but keep in mind, I mean, it's just kind of like Bezos at Amazon. Not the same scenario because he's the founder. He's the nuts and bolts. You have their CEO, though, going to the chairman role. They're still going to be a decision maker, probably for some of the largest decisions being made. They will have their input, but check it out, folks. We put this thing. You don't have to go back far. I mean, go back to maybe 2014, you were trading at under $100, right? Now, what's interesting is, talk about a roller coaster. There's been life and death a couple times in this equity in terms of being above 300 in 2017 to back under 200 by the end of the year. We were up to 368 in 2019, and we dropped down to a low. This is nothing to do with COVID, a low of 222 from 368 just in the span of about 4 months. So there's a lot of volatility in this equity. And then, of course, the COVID lows of about 124. We run up to 350. We're sitting at 311 right now. Be prepared for some volatility if you're in that equity, though. They're guiding down for comp sales. You're coming out of COVID, right? Malls, they should benefit in some capacity. Ulta doing some serious business online, but they're going to have a new CEO at the helm. And we'll see how that shakes out for that equity. But down double digits today, about 10% for Ulta on their earnings last night. All right, what else we got? Poshmark, better than expected sales for the latest quarter. They're an online retailer, secondhand goods, current quarter forecast short of analyst estimates. You're seeing a lot, folks. This one tumbling in a big way. Posh is their symbol. Kaboom. From $60 yesterday, talk about some optimism. You trade from under 52 to 60. You traded up like 15% yesterday coming into their earnings. We're now back down 18% on the session. I mean, this data gets a little skewed when all you've really done is traded back down to where we were Wednesday afternoon. You had so much optimism built into this equity coming into their earnings. They disappoint in a big way. You're down 18% right now, but you put it on a daily. I mean, that's a tough one, folks. Doesn't get much tougher than that. There is no optimism whatsoever. The only optimism on this chart, they obviously just went public on January 14th. No wonder they're on my radar in terms of recognizing the symbol. Up to 60. The only real day of strength, maybe you could call it February 11th, was them going into earnings. They disappoint in a big way. We're going to challenge all-time lows right now on Poshmark at 48.81. Novavax. So this one, talk about some strong data. Novavax, after the bell last night, they are positive. They came out with some vaccine news. We'll pull up that after the break right now. NVAX is their symbol. Novavax up 7.8% today. Getting into the short term, we were as high as 237.42. Talk about giving it up. We're trading at about 200 right now, but strong data for their vaccine. Stay tuned, folks. We'll be right back after the break.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart here up of limited brands. So Victoria's Secret, full disclosure, I have some limited brands just in my retirement accounts out there. Man, talk about a rebound in this equity, folks. And again, you know, use your own personal experiences, right? This brand was getting pummeled in the beginning of the year. Now, they originally had a deal that they were going to spin off the Victoria's Secret brand because they also have Bath & Body Works, which has been a great brand for them. So Limited Brands basically encompasses, we'll pull up the fundamentals of this, analyze it to get the full breakdown. Companies focused on women's intimate and other apparel. So they have Victoria's Secret and Bath & Body Works, the two biggest brands out there under their umbrella. You pull up the chart. Now, right now, you're looking at an equity. At the current valuation, you're talking about a $16.7 billion market cap. Victoria's Secret has a brand name that seems like it's going nowhere, folks. Okay, now they've been pummeled in a big way, right? They've been losing money in a big way, probably have to dramatically change their business. But you talk about an equity that you're at $16 billion at $61. You have, in terms of outstanding shares, you're talking about 278 million outstanding shares, okay? So you're talking about when you were at $10, this entire equity was only at about $3 billion a market cap when you had about 10, right? This company at $3 billion compared to some of the valuations out there, folks, there was an extreme upside potential even prior to COVID. When you're sitting at about $20, that's putting this equity at about $5.5 billion market cap, okay? Combining those two stores and combining the fact that Victoria's Secret was pummeled so dramatically, the potential for a company like this to be worth more than $5 billion even prior to COVID was substantial, in my opinion, and it's proved to be true. I mean, talk about a run from $8 up to $61.22. We're going to put this thing going all the way back. We were at $100, but boy, talk about getting it back almost in no time. It took you for a period of about 6 years, from 2015, trading at 100, to the lows of 2020, we'll call it 5 years, of $8, and just like that, in the span of about 12 months, we've gotten back almost 6/10 of it. We're at $60. We're coming right up to the highs we had from December of 2017. Now, we'll put this thing back on a daily. Today, you're gapping higher. You're up 7.8% today. You have L Brands rising after the retailer hikes the outlook and reinstates their dividend. So, to get into it, they forecast first quarter earnings per share to fall within the range of 55 to 65 cents. They were looking for 35 to 45 prior to that. They plan to repay $1.03 billion of debt using the $1.1 billion cash they have, and they announced a fresh $500 million share buyback plan to replace its existing plan. They also said it will reinstate its annual dividend at 60 cents a share, beginning with the quarterly dividend paid in June. Building on the momentum it saw over the holidays, L Brands now forecast first quarter earnings, as we said, 55 to 65 cents. Just strength all over the place, folks. L Brands is still forging ahead with its plans to separate Victoria's Secret from Bath & Body Works, which it expects to complete by August. The company has said that it will either be through a spinoff or a sale to another entity. Last year, L Brands, they had struck a deal, to sell Victoria's Secret to Sycamore Partners, but the $525 million agreement fell apart as COVID hit. Now, that agreement, they were still going to maintain something like 40% ownership in L Brands, selling the majority to Sycamore Partners. When you're looking at market valuations, right? Context is important, folks. And the reason why this one popped up on my radar, and it was prior to doing the newsletter, it was prior to COVID hitting, okay? It was because a company with the continued strength of Bath & Body Works, which was delivering tremendous results, okay? With a company with a brand like Victoria's Secret, which, yes, had faded in dramatic fashion, but you combine those two companies and you tell me that that whole company is only worth about $5 to $6 billion, and I say in context that should be worth more. In context, if they get their act together, that should be worth more. The potential was dramatic to the upside. I'm going to compare it to a company like Stitch Fix, okay? I've been talking to people about Stitch Fix, okay? Stitch Fix, folks, has a valuation of $5.3 billion right now. If you told me that a company like Stitch Fix, which they do $500 million in revenue per quarter, folks, they're nothing to joke at, but their valuation, as was proven from when they just came out with their earnings, which is the fall off they had from 72 to 50, let alone when they were valued at over $10 billion at some of the optimism they had in early January, okay? Things got a little out of whack to the downside for a company like L Brands when they had the consistency of Bath & Body Works. They had the upside potential of a damaged brand like Victoria's Secret. I mean, it seems to me that, and I'm not a woman, most of Victoria's Secret products, I think if not all, go out to women, but that is a notable brand that may have a substantial presence for online sales. Whether it does or not, okay, but the potential for that was extreme, and you've seen the run that L Brands has had, and it's not stopping. I've unloaded some of what I had in my retirement just to take a little off the table as we got, into like a 5 or 10 bagger almost off of the lows. Not quite a 10 bagger, but we're within $19 of that level, from $8 to $60. Think about some of that stuff when you see some of these companies. Strong brands, damaged in a big way, okay? And this company was not going to go BK. They had the wherewithal and the funding and the balance sheet to survive COVID. They paid quite a price here when you went to 8, because what happened is that the deal to sell Victoria's Secret fell apart. And that really freaked out the market. The market really wanted to see them get rid of Victoria's Secret so that it would stop weighing on the dramatic run that Bath & Body Works was having in terms of earnings and growth. Nonetheless, you see the potential when you handle a company like that. You're talking about a company that was basically at a price level of, at those lows, you're talking about $2 or $3 billion for the entire company of Bath & Body Works and Victoria's Secret. And now you see the run it's had. We're looking at a valuation right now in L Brands of $17 billion, much more appropriate for that company, in my opinion. Okay, what other news we got going on? Jump into stocks making moves. Let's see, what do we got? So we'll get into Netflix. This is an interesting one, talking about streaming companies. We started off the program talking about AT&T, Time Warner. Netflix, they're testing a new feature to limit password sharing, with some users receiving requests to confirm that they live in the same household as the account holder. Be interesting to see how substantially they lock down on this. Of course, it's been known for a while. Netflix, depending on what plan you have, usually it comes with whether you can watch a couple, you can be streaming on a couple platforms, devices at the same time. I think their premium plan allows as many as 4 people to be streaming at the same time. I mean, if you have Rokus all over your house or streaming players all over your house, which my house actually does, somebody could be watching on the living room. You got a kid watching in their bedroom. You got another kid watching in their bedroom. And maybe you have your grandmother in the spare house in the back that's watching, on her television. Not outlandish when you can do that. If they start clamping down, I wonder how they do, because you're not going to want to. What happens when you have a student that's outside of the house, right? You have a child that's outside of the house. They're on their tablet. They are part of the family. They're using it. Nonetheless, there's a huge opportunity for Netflix when you think about the number of households that could be sharing passwords. But nonetheless, you get Netflix with the technology stocks today. Netflix definitely still a growth company, not as much in the U.S. as internationally, but Netflix down about 2.9%. Not necessarily on that news, but keep your eye on that one. And we'll jump to Disney shares up today as well, and checking back in on AT&T up about 3%. Stay tuned, folks. We'll be right back after the break.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got some exciting changes kicking into action Monday morning. We got a new morning programming lineup starting things off Monday morning. I'll be doing the morning market kickoff, 9 a.m. till 10 a.m. I'll be jumping in the spot that was held by Mr. Larry Pesavento. Basil Chapman will be hosting his Tiger Technicians Hour from 10 to 11 a.m. Fast Market stays in the 11 a.m. time slot, and Larry Pesavento will bring his program, Trade What You See, till noon till 1 Eastern time. So I'll be hosting 9 o'clock, Basil Chapman hosting 10 o'clock, Larry Pesavento hosting 12 o'clock. Steve Rhodes staying in the 1 o'clock slot, Dave White staying at 2, Tom O'Brien, my dad, staying as the cleanup from 3 till 4 p.m. Eastern time. Exciting times, folks. We'll be kicking that off on Monday morning. All the archives always available. If you want the full schedule, right available on the front page of TFNN. This brings you to our Tiger TV page, which, of course, you can access the programming right here. Our schedule also listed on this page as well. So we got the updated schedule kicking into action on Monday. I encourage you, folks, give us a call. Give me a call right now. Still time in the program, 877-927-6648. If you're internationally, 727-873-7618. And then also, folks, the archives. Everything we do is available, archived on this page, also archived on our TFNN YouTube page. Just go to YouTube, search TFNN. You can subscribe to our YouTube channel for free. You get all the archives there. You get notifications when we start streaming live. And we're going to be doing some exciting stuff over there. We may have some live streams going on overnight or even over the weekends, potentially in the weeks or months to come. Just some stuff brewing in the background, but a little bit of a teaser there. But check it out, folks, the schedule, whether you're looking for the archives, and we break everything down from my dad's daily stock market recap. You got the interview section in there if you want to check out some of the interviews. Tom O'Brien Show from 3 till 4. And then you got each program, whether it's the morning market kickoff, Basil Chapman at 10, Larry at 12, Steve at 1, Dave at 2. Should be an interesting market lineup, that beginning on Monday morning, so don't miss it. I'll kick things off at 9 o'clock, and again, Basil jumping into the 10 o'clock slot, and Mr. Larry Pesavento, noon Eastern time. And don't forget, we move the clocks. We spring forward, folks, this weekend, so don't forget that one as well. Sunday night, Saturday night into Sunday, don't forget to update those clocks. All right, back to the market action. DocuSign Talk about some strong earnings and trading lower. So DocuSign's off about 7% today at 209.27. I'm just going to pull some of the headlines over here just from the news section of the Thinkorswim platform. They do a great job. They are a sponsor, folks. I know I'm biased, but they got a great job across the board. The point I'm going to emphasize here is that DocuSign crushed it, basically, in earnings across the board. I can't find a single thing that should pay the penalty for them to the tune of being down about 7% today. Whether you look at the analyst action following the numbers, okay, or whatever you consider in terms of looking at, let me just pull up real quick in terms of how it was surmised on the update from CNBC. DocuSign beat estimates by 15 cents, adjusted quarterly profit of 37 cents. The revenue also above analyst forecast. It also issued a better than expected outlook. Now they had it down 4%. It's traded a little bit lower since then. Then you jump back to the analyst action, okay? So we get, whether it's Evercore ISI, they upgraded to an outperform. They got a 285 price target, okay? You look at where we are, Morgan Stanley, they adjusted the price target to 290 from 280. Then you just get into the core numbers in terms of what we're talking about here, okay? Morgan Stanley, now they could be talking up their own investments, their own book, folks, okay? But there's some pretty staggering numbers here, and I'm going to get to the point in terms of optimism priced into some of these equities and not being able to live up to the optimism when it comes time. Billing guidance for 2022 was 32% at the midpoint, okay? But the company continued momentum implies plenty of room for outperformance. And international growth accelerated from 77% in the third quarter to 83% in the fourth quarter. International adjusted free cash flow margin ended 2021 at 20%, while operating margin of 12.4 emphasized the strong unit economic underlying DocuSign's business model. Net revenue retention of 123%, steadily marching up throughout the fiscal year, and came in at 123% in the fourth quarter. The point being, some of these companies that have benefited most during COVID have so much optimism built into them that you better believe that they need to literally crush it out of the park when they come out with their numbers to live up to the optimism priced in. I mean, we saw it with Stitch Fix in a big way. They turned a profit on their last earnings. You traded from 35 up to 113. Get out of here. Not appropriate. The market tells them so. You're back down to 50 on their earnings. And a company like DocuSign, this company is not going away, folks, all right? The world has changed. There's no reason why we need to sign anything over in person anymore. And DocuSign accelerates from 67 up to you could say 290, all right? That's a weekly. We'll even call this their high of 275, a little bit more of a real high up here in terms of consistency of trading higher. But just like that, folks, we give up almost 30%. We're now back to where we were in July. A consolidation probably needed for this equity, but keep these moves in mind because we're seeing them across the board in a big way. Dick's Sporting Goods, we're up today, but that company, same deal. Pretty strong numbers in there. They missed on some of the guidance, but you traded down from 79 to 72. We're back to about 75 on that equity. You want to watch these trends, folks, because these companies that have benefited the most, all right, the market is, I think, starting to believe that with a rising yield and with so much optimism built into some of these companies that are pricing in so much growth, you may face some headwinds, as is the case because DocuSign was a big one in terms of just all positive news, but the market said we wanted more, and you're down 7% on their numbers. All right, what else we got going on? Jumping around to some of the stocks out there with action. Verizon, this one's an interesting one. I mentioned my mom. She was a Verizon employee, a union employee, was able to retire at a nice young age for herself as being a union employee, got some nice perks out there. She's still got some Verizon shares. Verizon, they went to market with that bond offering. They were pushing out $25 billion. They got about $100 billion. $100 billion in bids it was for the $25 billion in debt. That's going to help them fund the $45 billion purchase of the 5G wireless spectrum. I believe they were the biggest player, biggest bidder out there for some of the new 5G bands that they were coming after. But Verizon paying a little bit of a price there, pushing out the debt yesterday, but you're rebounding today on a little bit of optimism and a little bit of safety trade, up about 0.9% with rising yields. You got Verizon in the positive at about 56. Checking back in on the markets, you got the S&Ps right now up, down 9 points all things considered, we're sitting basically at all-time highs in the S&P. Quite an uptrend channel since the lows of basically April, call it. And we got the NASDAQ 100 down about 213 points, quite a little divergence across the board. Stay tuned, folks. We'll be right back to finish up the show. 877-927-6648. Still got time for a phone call. Right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Keeping track of this 10-year right now. We made a new low, 131.23. We've popped a bit right now, but you got yields above 1.62% on the 10-year. The NASDAQ 100 continuing to slide. We're down about 2%. No, more than 2% right now on the dot at 265 points in the red, 12,773. Commodity-wise, we got gold down about $18. Gold pumping around right where we consolidated earlier in the year. You're looking at about a 618 retracement of the entire move up. That level right at around $1,700 as well. All right, jumping around a bit. So the story out there, you had Las Vegas Sands, right, selling their Vegas portfolio. Apollo betting big on a new Roaring 20s. I agree with this, folks. People, the pent-up demand in society. $6.25 billion is what they paid to purchase the Venetian and the neighboring Palazzo, adjacent to the Sands Expo Convention Center. The deal surprised observers such as, either way, it didn't surprise me in terms of Apollo trying to scoop it up. Point being, folks, travel is coming, all right? If you go over to JetBlue, this is just a public service announcement. Amazing fares still going on for JetBlue. When you click on the basic blue, okay, for bookings made before April 1st, there is no fee or for changes or cancellations, all right? We're at the final stage of this. I mean, President Biden, with the speech last night, pretty thorough in terms of he wants states to provide access to every single American by May 1st for the vaccine. Doesn't mean that you'll be able to get it May 1st, but you'll be able to get in line. You're going to see airlines. You already have JetBlue and Southwest, basically back to pre-COVID levels. If you're looking to travel, folks, some amazing deals. I just pulled it up. I mean, you got direct, one-way, non-stop trips under $70 across the board, folks, later in April. So look into that if you're planning, and I agree. This is, some of these stocks talk about pent-up demand like we've never seen before in our lifetimes. Thanks so much for tuning in, folks, and I'll see you Monday with the new schedule starting at 9 o'clock a.m. Stay tuned.